do I use both linear regressions and the HMA? Well, I'll tell you what I use. I use different things for different strategies. So what I like to use is I use this view. Let me do this. I'm just going to load. If you ever want to just load a template, just right-click and go to Template and Load. And if you're just starting with us, I would start with the Mel Basic chart and then add the HMA color change per the instructions in your Getting Started videos and the Section 7. But you can also create different templates. Like I have all these simple basics and different things that I create for different things. So if I was doing trend trade strategies, I don't use the LinReg 4. I only use the LinReg 9 and the HMA. So my chart will look something like this. Oops, took the wrong one off. Sorry. How did I do that? Let's just change this to the 9. So my chart will look something like this for trend trading. Now for counter trend trading, you can see it's a very much smoother view and it filters the chart. So when something's not true, like here is a red candle hinting, even with an asterisk, hinting that we could be closing the gap. Well, my LinReg 9 has not crossed my HMA. My HMA is still green. So I'm not really interested in that. That's what I call a fake out. There were indications that the market was trying to go in that direction, but there weren't enough traders involved in that direction to give you the follow-through. See, what people don't see, because we look at the market from such an electronical view day in and day out, that we almost lose touch. What we lose touch with is the human side. So just because we get a red something or an arrow or a cross, from a technical standpoint, it still requires follow-through. So remember the statement I made earlier, you have to wait for A to show up and then qualify A and decide, do you want to trade B to C based on the probability of how good A is. So if A is my red candle with my asterisk combo scenario, I would be looking more interested in this one, and I've now added a new filter. So no longer can I rely on red candle plus asterisk as A, representing A, because it's not enough to show me that it's a qualified follow-through. It's not enough. There's not enough traders, and that's where the human side comes in. If enough traders get involved in a direction, then you get your guaranteed trades. So what Shadow Traders' motto is, and what you always have to remember, and why we give you so many tools to work with, is that the motto of Shadow Traders is what keeps our traders above 85%, is you have to have 3 or more confirmations show up, and the more the better, to give you that high probability move. So it will be red candle plus asterisk plus LinReg 9 or HMA color change. Now I've just increased my probability factor to a qualified A, and when that shows up, I now can trade from B to C. That's how you have to look at the market. So you can't just go, oh, well, the fractal gave me an asterisk, you know, and I got a red candle, and here we go. And those are at the top. That's not enough. Medea says, great explanation. So that's the key thing to getting consistency, is having the right balance of your indicators working together to give you those self-organizing patterns that are high probability. There's lots of red and green and lots of arrows and things and different things. Every indicator is going to show you every time the market changes. But not every change is a high probability trade. So that's where indicators and technicals fall short, is because they can't think for you. They can't say, this is a perfect change in the market, this is the one you want to play. Goodness, if we had that, we'd sell it for $1 million, because that would be an ATM machine. Trust me, we wouldn't be here talking to you. We'd be gazillionaires. Nobody has that. Nobody has an indicator that can think for you, that tells you. And if you're looking for that, I'll tell you right now, you have the wrong expectations, and that's why you're not successful. The key thing is to become educated and skilled to learn which indicators work well together, which is why you're in class today, so that you can see when the red and the blah show up, because I have now confirmation number 3 and confirmation number 4, this is now high probability. So let me explain one more thing here. Somebody wanted to ask me about fractals. Could I show a simple chart with fractals? And absolutely I can. Now this is a flat market, so let's see here. Actually, let's do this. I can do this. I will disconnect for a second. Let's do this change from the end of the party. I think that's a good time to talk about fractals here. And another great thing, what I do on the replays, you can actually disconnect from the market. So you got your charts, but no live data feed. Because remember, fractals are dynamic. So as long as the market is still counting price action, it's moving, fractals are always going to move. And as the new ones come in, the new fractal rays, the old ones are going to disappear. And they're going to leave behind the asterisks to show you where they once were. So if you want to go back and revisit that, all you do is you scroll back on your chart, and you can do this, it works very nicely, and you just click on you just in that area, and you hit the F5 key, F for Frank, the number 5 on your keyboard, and it will restore those historical fractals without making them disappear. So now all you do is you simply, this is a great exercise, is you simply click on your scroll bar here, just click away, and you watch how the fractals come in. So here you can see the price action is going down to the red fractals. So let me just explain something. When it comes to, very simple with fractals, when it comes to your 2 most basic strategies, your gap trade and your trend trade. Your gap trades, you use the red and the green fractals. So because we're in a downtrend, right, you trade off the moving averages, and you exit at the fractal, because when the price action hits the red fractal on a downtrend, you know that it's ready to bounce, because think of the fractal as a pivot. If you think of the market coming down to a pivot, it's ready to bounce. It's hit a floor. So the fractal is also a floor. It's just an angled floor. It's moving with the price. So if you think of the trend goes with the moving averages and then hits the floor, which is if it's a downtrend, it's going to hit the red fractal, and then it's going to bounce off that floor. And the fact that we have multiple rays here simply comes in as the price changes from lower lows and higher lows. It's like Fibonacci's. It's giving you the range. How do you know which of the red fractals? Well, you see, when you're trading up here, these other fractals are not really in the equation. You're really trading. I always like to use a combination of the pivot and the fractal. So I always say that when the trend starts, you're always trading to the outermost fractal. The outermost fractal is the ultimate floor. But once the trend is in motion, and the steam starts to peter out, the energy starts to fizzle. Okay, traders are losing interest in the direction. Then you're going to start to see they're going to start bouncing off the inner fractals, because they're showing you the fizzle. The inner fractals are showing you that we're now, we're basically hitting a higher low as opposed to a lower low, even though this position is actually lower than the previous position, when they represent a higher low. If you think of it like that, your inner fractals are saying we're no longer going lower here, we've hit a fizzle point. So So that combination of the fact that we're in a fizzle point, I'm more interested in that counter trend. When I see them hit the outer fractal here, I'm not really interested in a counter trend, not against the moving averages like this, especially, you know, if I don't see the 3-minute involved and all the other things to show me we've hit the end of the party. And if the Segredo hasn't given me a 7 or 8 or it's changed to yellow yet, so I'm not interested in that here. But when I start to see the inner fractals come in, then I know on the trend, then I know that things are petering out. Now, so you have to understand it's the same on the green. But let's complete the exercise here, and I'll show you. Okay. See, now we have the brown fractals come in, and the red fractal was strictly to give you your gap trade. So the red fractal, we basically, what do we do here? We close the gap. We close the gap. Now notice we have the brown fractal. The brown fractal and the turquoise fractal are really for your trends. Okay, so what you'll see here is a change of direction in the new trend direction, the developing trend here. Look at your stows, your MACD. This is your classic reversal perfect trade. And the maroon fractal came in beforehand and told you it was coming. The brown fractal. It basically said we're now in a new trend direction. And the brown is for going long and the turquoise is going short. So the brown comes in basically when the 13 and 20 are about to cross or crossing at that point. So if you look at it from that point, sometimes the timing is not always absolute. Let's go with the turquoise and see over here. Let's take a look at the turquoise in relationship with the green. So if we hit the F5 key, okay, so here we're going up to our green. You usually hit the outer fractal first. And then what happens is sometimes in this case you can see the turquoise showed up a little early. Sometimes it will show up when the 13 is really ready to cross. But as you can see here, the turquoise fractal is now showing us our downtrend short. Now, one thing you want to obey, whenever you see the maroon fractal, the brown fractal, and the turquoise fractal cross, we call that our classic fractal cross strategy. And that basically says there's a significant move coming in that given direction. And if you're not sure what the direction is, definitely pay attention to the rest of the rules, like your stows, your MACD, and most of all, your HMA. If your HMA is red and your turquoise coming in there first, so when we're going short and we're in a reversal, everything's heading for a reversal, that fractal cross showing up told you that reversal is going to be pretty significant. Okay. How do you know which of, okay, I answered that question. Show how you reveal the fractals with the F5 key. You just basically, and so look now, we're clicking down and of course we hit the outer fractal. And so while the turquoise is there, it's basically showing me the trend. As you can see, the price action has continued lower. So my turquoise fractal is actually for the trend short. And my brown fractal is for the trend long. And then the red and the green you use to time your gap trades. See, I will be using the green asterisk of the asterisk that came with the green fractal here. Let's move it along here. And the asterisk that came off the red fractal to time my gap trades. Now, remember the statement I made just a moment ago about when A shows up, you trade from B to C, and it must be a qualified A. How many confirmations do you have in your A that shows up? So for your strategy. So let's talk about fractals as part of your A pattern that you're looking for to confirm your entry. So here we got an asterisk off the outermost fractal. So you're thinking, is this a qualified gap trade at this particular point? And it could have been. It could have been. However, at this moment, our MACD is still going through the center line. The trend is very strong. And if we check the higher time frames, they're probably all going to be going lower. But most importantly, we don't have the HMA or the Linreg 9 involved from the point of entry. By the time the Linreg 9 just barely crosses over here, my HMA is still red. So now I've got a filter to prevent a fake out. Because now I can say A must include asterisk bounce off the red fractal to give me my gap trade Q with going ding 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 gap trade. So asterisk with the red fractal plus Linreg 9 cross plus HMA color change with the divergence there. Now I go, I'm ready for a gap trade. So, and now my MACD's on the other side. It's not going through the center line. My stows at the bottom. So you see, when you start adding more confirmations, you start minimizing your fake outs, and therefore you will become, your batting average should start being above 85%. It's because you don't add the right number of filters, confirmations, to A, to trade from B to C, that it becomes a more hit and miss. You start trading every asterisk. Well, that's not the point of asterisks. It's asterisk plus, plus, plus. This is a really beautiful system. Keeps getting clearer and clearer. Excellent. Thank you. How far ahead is the usual fractal cross? How far ahead? Well, that's a good question. Let's see if we can get another fractal. So we're following the click-in here. Here's a fractal cross. Okay. So now I'm looking at this. I'm looking at my stows. I'm looking at my MACD. And I've got my brown fractals come in. I can see my HMAs change color. I'm all set up for perfect trade. I know we're below the S4. So chances of us going higher, the fractal cross is not always finite. Sometimes the move starts just before the cross, sometimes the move starts during the cross, sometimes the move starts just after. I wouldn't play so much on where's the move in relation to the cross. Just know that you have a cross and it should be a more significant move, and follow the rules of the criteria for your strategy. So if you're doing a gap trade, you want to make sure you have your HMA color change, your stows, your MACD. If you're doing a trend trade, you want to make sure you have the moving averages touching candle off the 13, you know. So that's really what you're following. It's not so much the actual position of the price in relation to the cross. Okay, so it's just the fact that you have a cross tells you that it's something significant. So as you can see here, because it's going to be different in different places. It's not so finite. It's that trajectory. It's that forecasting. Fractals are more of a forecasting thing. They're not as finite as an HMA color change. An HMA color change is more finite. Did you say enter gap close on the Linreg 9V? No. Basically, for trend trading, I use the Linreg 9, crossing the HMA for trend trading. So in this particular case, because I have the Linreg 9 up, I'm using the cross of the HMA for this trend. To the previous question somebody asked me, if you want to do gap trades, which was the next thing, you can simply use I'm going to change the Linreg 9 to a Linreg 4. And if you want to get those fast changes, those real scalping moves, then you would use the timing of the Linreg 4 maybe plus HMA. So see, something like this, here's the V of the Linreg 4. So you're going to have to, here you can see you can use your Linreg 4 if you want to get in nice and early. I tend to use the Linreg 9 for my trend and the Linreg 4 for the gaps, because then you can see that nice sharp V for the gaps, so you can get in nice and early as opposed to late. See, and here you can see a fractal cross. The move happened quite substantially before the cross, but the trajectory is already there. So would you think the 9-10 entry would be a good clear trade entry since the HMA is green and the Linreg 9 is trending? The 9-10 entry? Yeah, the Linreg 9 would be here. Yeah, this is a, well, it's really a, I'm not going to call it a trend trade at this point, because then it would go against all my clarifications of what's a trend, per the earlier classes. And the trend is really 3 or more moving averages. And in this particular case, we haven't crossed the 50 yet. So we're not really in the uptrend. If we look at it from this perspective, can you see how insignificant, it's all about perspective, yeah? How insignificant this move is in relation to this move. So this is really the trend, and this is the counter trend. We're countering the trend of the moving averages. So what I like to say is this is your perfect trade, which is the developing new trend. Then I don't have to confuse everybody with the definition of the previous clear trade, which is have that third moving average and follow the trend of the moving averages. So this is the actual trend, but this is the developing trend. I prefer to just call it the perfect trade or the reversal, so we don't get our trend definitions confused for all the true trend traders. For the counter trend traders, they don't care. They just follow the crosses and off we go, and the Linregs. But for the trend traders, I don't want to confuse people. The trend is always majority of the moving averages. The price action clear of majority of the moving is the true trend. So let's clear that up. But, all trends change and they become a new trend. So once it crosses the 50, it's a developing trend. It still doesn't mean that the market's really going to continue up. As you can see, it continues down. It's the developing trend. Doesn't mean the market has now suddenly become bullish. Can you see from this perspective now how insignificant this is in relation? So from a trend perspective, my rule of thumb is always, when you're not trading with majority of the moving averages, keep your moves shorter. And if you are trading with majority of the moving averages, then you have a more wiggle room for later entries and you can go for more. And then we could talk about other things like stows, hitting overbought and oversold and so forth. As you can see here, that's the thing about stows, though, is that they show you a longer term prediction. They're not going to show you the shorter changes. You can see that the 100 touched down here, went up, but then it came down, touched down again. Key factor here is that with stows, which you can always use as well, is this is called a runaway stow. If you learn the rules of the stows, when the stow 20 separates from your other stows, you know that this developing trend is short. It's not going to hold true because it's run away and left the others behind. So as soon as it hits its target, it's turning right back around, and as it did, it turned right back around and came down and hit oversold again. Oversold. So to not confuse you, simply follow the rules for the strategy. What strategy are you going for, and what barriers are in the way that you need to pay attention to? That's all the only 2 rules you need to follow. So at this particular point, you're following the perfect trade strategy. And what are the requirements? Your stows being in alignment with your MACD, having crossed the 20 line, be below the 20 line on the way back up, your 13 and 20 crossing, your HMA changing color, and you have a pivot here. This is an intraday pivot. So you got a support point, you got the fractals there. So this is what's giving you that perfect trade criteria. And where are you trading it to? Well, you're really trading it to the next barrier, which would be a pivot or the 50 SMA. Most of the time on perfect trades, you can pretty much get away with it trading to the 50 SMA. And then I would be out by the 50 SMA for all perfect trades, reversal trades. And then see how the trend develops. Does it cross the 50, go to the 100, go to the 2, based on the matchy-matchy of the higher time frames? Is the 3-minute involved in that direction? See, these are your additional peripheral view. See here, per my 3-minute, it changed, okay? But as you can see here, the HMA changed direction, not interested in even going near the 50. If we look at the 5-minute, look what the 5-minute did. So, you know, this is why I like to use different time frames to give me a peripheral, because who was really the deciding factor on this trend change? The 5-minute gave you the biggest clue. We look at this from a side-by-side perspective. This trend change at 9:10 was really a gap trade on the 5-minute chart. And it stopped on a dime as soon as it hit the 13, and then it continued with the overall trend of its moving averages. Can you use a 200 SMA to determine if the price is bullish or bearish north or south of the 200 and then just trade the 13 and 20 crosses? Well, you can. The price definitely bullish or bearish of the 200. But remember, you have to pay attention to your other basic rules, like is it a fist, is the 200 in a fist with the other moving averages? Let's use these two examples. Before I get on to this question, I want to make sure that the person who was not clear about fractals, if it's much clearer, remember to keep it simple. The latest fractal is always, whenever you're looking at price action, if I, let me do this. I'll hit the F5 key. It's on the top of your keyboard. Just hit the F5 key with your finger, and it will refresh the fractals for you on the current chart. Now, if you're not sure, you got many fractal rays, okay, and you're not sure which one you should really be following, they're all basically showing you where things were and where things are likely to go. You always look for the most recent asterisks closest to the current candle. So if the current candle is always the one that's closest to the right side of the chart. Here is the asterisk that's closest to. So that is the fractal we are trading off in the moment until the new fractal shows up, or the new circle with the dot shows up. Is that clear? Because now new counting is in play. It's counting, counting, counting. We're now gap trading off the green fractal. Hasn't told us it's going to reverse yet. It hasn't told us it's going to go up yet. It's just for right now, we're gap trading to the 13 off the green fractal. That's all we got to work with. Is that clear? And then you have to see what happens next. So your gap trade is over once you hit the 13. It's finito. Runaway stow, coming back down here. Now the brown fractal shows up. Now we have the latest asterisk closest to the current price. And that asterisk is now the one you obey. And you ask yourself, what move do I have now? Maybe I have a trend trade long. 13 is crossing the 50, touching candle off the 13. MACD is going towards the center line. So that's what you're looking for next. But you have to ask yourself, do you really want to take this one? Do you have enough room to get filled before you hit the next barrier, which is the S4 in the green fractal? So this might not be the smartest one to take necessarily. There it comes right back down. So not a lot of room to get filled. So if you were sharp as a bunny and a whiz and you got in right there, maybe you scalped your 3 ticks, good for you. Or you razor sharp sniper traders. But for the slow coaches, then that's not your move. You need to go for the one with less barriers in the way, with more spread for you to trade. So these are the decisions you're going to be faced with as you go. So this is what we call, Clive, trading in a sandwich. And the answer to trading in a sandwich is you never trade in a sandwich unless you guarantee that you're going to get your ticks. And you can get in and get out before you hit the other side of the barrier. That's the answer. And if it's too tight, no trade. Some sandwiches are a little more spread out. What creates fake out moves the market? What creates fake out moves the market or the people behind the scenes trying to fake us out? No, fake outs are not, there's not deliberate people there necessarily trying to go, hee, we faked you out. Market's too big for that. Well, look, there's definitely HFTs. They come in and they know that the retail traders are going to get suckered in the high. They say they shoot it up like this is an HFT. Okay? Classic HFT. Look at these big bars with a wick. Anything you see with a wick or a tail is an HFT. And what they do, because the candles represent so much emotion, they start trading and look, this was actually a news item, but anyways, they come in and all the retail traders, except for the smart ones like you that have been trained by shadow traders, go, oh, let's go long, it's green, and they jump in and then they take they take their profits, they take them out. So that's the only time that they really fake you out. But fake outs are more about how many traders are involved in a direction, and you're only faked out because you never qualified the strength of the agreement, and you never used the confirming indicators to show you that strength of agreement. That is what constitutes a fake out. It's not something vindictive or deliberate. It's just we use that term to say there's no strength of agreement there. There's not enough traders in that direction, and you got faked out because you didn't qualify it well enough by using enough confirmations to clarify that strength. So let's use this example. If I was trying to do this gap trade with this asterisk, this would be faked out. There's not enough traders in that direction because the HMA is not involved. And the HMA is telling me, hey, we haven't changed color yet. That means there's not enough traders. We're still going short. Majority of the traders are going short. That's what that moving average is averaging out for you. So you need to use it like that. So when it changes green, it says, hey, we've calculated that enough traders are now buying, so go long. And that's what a fake out versus a qualified entry is. What are your strength of agreements for trend trades? Sometimes I feel like they're trying to throw us off. Well, you know, at the end of the day, you have to understand it. It's just a game, guys. There's electronics, and it can only do so much for you. You know, you can't forecast everything, and you can't anticipate. Like a lot of times I get these predictive questions. Well, how do I know? Which starts with, how do I know if blah blah is going to happen? Well, the truth is you just don't. But you can, within reason, you know, all the boxes checked, you can pretty much rely on the criteria of the strategies as Barbara has designed for you, because she's back-tested them and back-tested them and re-back-tested them and reanalyzed them, and she's put all the time and energy into what works and doesn't work. That's what you're paying for. Okay, someone else has already analyzed things for you, and so you just need to follow it. You don't need to forecast what the market's doing or not doing. That's not your job. And the more you start to think, the more you're likely to get into trouble, because the market will basically doesn't care what you think. You just need to follow what's been back tested and proven to work as the strategies have been designed. What are your strength of agreements for the trend trades? Well, you need to follow the rules from the previous classes that we discussed. Basically, the trend trade rules, which are your touching candle with your Linreg 9 or your HMA with 3 or more moving averages, and 15 degrees, and things like this where the MACD is going through the center line. That's a beautiful thing. Beautiful thing. Look, let's take it back a little bit. If the MACD is approaching the center line, here's the nice cross. There's the minute that 13 crosses at 50, there's your touching candle. HMA is red. You got 15 degrees or more on the 13 moving average. You got yourself a clear trade. So you can use things like that. Now, the MACD is not always going to help you out for every trend trade. Sometimes it's going to be way above. So this is where I use this, and I use the moving averages. How many moving averages? My Linreg 9, my HMA, and most importantly, I use a second time frame. That is really your biggest confirming factor for trends. Because look at this. When you start to look at the summary of a 5 or a 3-minute chart, now it starts to be crystal clear where majority of the traders are, because the 5-minute is summarizing huge amounts of averaging, huge amounts of trades. So now you can see, well, the trend is really to go short. So I can fine-tune my timing here around 10 o'clock by using my 1-minute chart to say, okay, I want to enter on this candle, not that candle, but I want to go short because that's what the 5-minute is telling me. And that's how I use it. When you have a shrinking range and lots of fake outs, I would think the fake outs masters are getting in especially a lot, and I would just wait till another fan. Yeah, well, you see, whenever you get into consolidating, you see how when it's going into the sandwich here, when the market's flattening out, doesn't matter how sexy, I call it sexy candles. Doesn't matter how much momentum's in the bar. These areas here, this is not such a good example because it's below the S4, but let's find, these are good examples. When you see that the moving averages are clustered together, and you look at these bars, you see these HFT bars come in, and then the traders see that, and then by the time everybody else reacts, this is what happens. They get in at the high, and then there's this pullback, and it takes out everybody's stops, because average Joe trader will have a very tight stop, and that's how they take them out, because they know that the average Joe has a 3-tick, maybe to a 10-tick stop, and they take them out because they're scared of risk. Only the big boys have wider stops because they have more money to play with. They understand the risk factor a little bit more, but the little guys can't afford to risk much, so they have tighter stops, and that's how they get taken out, and then the trend goes anyway. And that happens in this. Now, coming to the fist to fan question and that 200 moving average question that somebody asked earlier, you can pretty much, you see, like things like this, where even though this is a news item actually, but things like the 200 moving average, if you were going to focus on trading 1320 crosses or the HMA crossing the 13 in direction with the 200, and if you check with your stows and your MACD, that's a nice little pattern to follow. Let's see a couple more here. See, here's your 200 moving average along with your 100 moving average crossing bullish. So if you took the 1320 cross, regardless of, if the candle is going red but it hasn't filled you yet, you could backtest something like that and trade that as a trading plan. It would be feasible. But things like this here, when you're in a fist, it's going to be hard to tell direction. See, it hasn't established the direction here. It's going up to the 200. But things like this, where it's, once it establishes direction, you could always either enter slightly later because it's the beginning of the party, when it's the beginning of the party like this, I always enter slightly later. I want to be sure, and or even the second leg. But here's what I really look for. Here's the what I really know is you want to pay attention to that 200 moving average and the direction of the 1320 cross. But essentially, you want to look for candles going lower than the previous candle. When the candles start to pull away, then you know the market's really ready to break out. When the candles are side by side, they're not ready yet. So in this case, the direction would not be long. I would certainly be paying attention to that 200 moving average. But most importantly, if you want to know whether it's going to go up above the 200 and break out long or low, then I always say go to the higher time frame. If you're not sure, go to the higher time frame. Let's do this. And this is pretty much my rule of thumb for festive fans. Here we go to 1 o'clock in the morning, and now becomes really more clear per the 15-minute chart. Where's the third moving average? It's on top. Where's the 13? And if it's a 15-minute 13 moving average, it's more laggy than a 1 minute. So it ain't going to just turn around and cross that 20 long, especially if your Lindregs are now crossing your HMA, your MACD's going down, everything's coming down, chances are it's going to go lower. And you can go higher. You can go to a 60-minute chart. Look at your 60-minute chart. It's already established the red HMA. Oops, wrong place. Sorry, over here. Your HMA is red. 13's crossed. And those 1320 crosses on those higher time frames are pretty strong. Like once they've crossed and you're into the going into that candle below, they're pretty strong. So that's really what helps me with those festive fan directions. You must check the higher time frame and then wait for the 13 to cross. Ideally follow the direction of the moving averages below the 200, and essentially when those candles start going lower, 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 or higher, 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 they start to pull away. See, I'm always looking for this relationship when I'm looking for trends. And if I don't see that, I know it's not ready. If we want to avoid the fake outs and sit on our hands until the right time, I think we definitely need the 15-minute chart. Yes. So what is the instrument to trade for the small boys like us? Well, there isn't a single instrument to trade. You can trade anything you want to trade. But if you are in the smaller income bracket and you don't have a whole lot of money to risk, I wouldn't be trading things like crude oil or gold, because the whipsaw and the volume in the market is so great, makes it very volatile. Just as it's going up, it goes down 20 ticks, then it goes up some more, and it's very hard for you to take your smooth, even pace and time your entries nice and swiftly. So that's not for the faint at heart, and it's not for the inexperienced. You need to have your entries razor sharp if you're going to go trade in crude oil and gold. So if you are a nervous system trader, I would stick with the currencies because they take their time, but they give you nice trends and nice price action. And markets like natural gas, stick with the trendy markets. Even the Russell, the TF, is going to be extremely volatile. You can trade at times as well. So there isn't really a particular market to trade. You can trade anything you want. And if you're not sure, the key thing is to replay them. Just replay, and see which ones you're comfortable. Go, oh, I don't like that. I just tried that and I got whipsawed on that thing. You'll get the feel of the temperament of the market. Who's controlling going after those 3-tick stops? The big boys. They run the HFTs, the robots. The guys who paid the millions of dollars to program those robots. you have to remember that, the CME at the end of the day is a for-profit business. It's a business. It's like the casino. Just because it's the market, it's just, in my viewpoint, it's just another casino. The house has to make some money at some point. So, they allow, they get paid commissions and certain, fees and all kinds of things. They allow these big boys to come in and do their shtick because they work out these deals. Just like the hedge funds, they pay the millions of dollars to get the news report, a minute or two earlier than the rest of the people, so they can get ahead of the curve. What are your, okay, let me see, any other questions? So we've covered fractals. I want to make sure you understand. I didn't get into too much on fractals, but I always say, if you're confused about the fractals, what I like to do is, if you're a trend trader, essentially, is I like to use the fractals on my 3, 5, and 15-minute charts, and then I take them off the 1-minute chart. If you are a scalper trader, then use the fractals on your 1-minute chart. Even your 30-second chart is very nice for fractals too. How about replacing the 1-minute ninja chart with the 1-minute Segredo chart? Any disadvantages replacing the ninja 1-minute with the quant 1-minute? My 3-minute chart is my trigger chart. Perfect. No, that's a beautiful thing. That's a great. See, you guys can play with your workspaces. There's, like I said, there's no right and wrong way to do this thing. Yeah, let me move it forward. It's about what you're comfortable with. You learn the rules for the strategy. So here's my 1-minute Segredo quant. Okay, and here's he uses a 3-minute as his trigger chart, which I highly recommend. So, when you start to see, the numbers are side by side, lots of numbers in this, repeated 3s or 4s or 5s, you can see with your 3-minute chart, well, we're kind of in a fist here, kind of flat. Nothing's really broken out yet, so I'm not really going to take that. But as soon as you see your 13 maybe cross your 20 here, maybe we get another circle with the dot and then go long, or we cross the 15, go low, and you see a 1 or a 2 show up on your, it'll give you a new cycle on your Segredo, and go for it. Let's go to, because it's the afternoon session, so let's go to this move here at 10 o'clock so you can see something more significant as it would be plotted. So here at oh, is he doing that? Okay, so here at 10 o'clock, I don't know why it's oh, I know why, because my chart is too long. Okay, so 10 o'clock, you can see, when you see your HMA's good to go, your Segredo's there, and here's your 3-minute 10 o'clock, you can, now it becomes pretty clear as to the direction. Your 3-minute moving averages are really confirming the direction. Your 3-minute HMA is red, and you see your 1s and 2s and 3s show up with the red Segredo. It gives you that boost of confidence. You're good to go. And you can also use the Segredo 3-minute chart with the 1-minute ninja. It works using www.segredoquants.com instead of the Shadow Traders URL. No more freezing. Huge thanks to the person who gave us that tip. There you go, Kathy. Good job. So guys, if you're still having freezing, once you've signed up with the Shadow Traders URL, then switch to www.segredoquants. Did you see the CNBC with the big news a couple of weeks ago about some traders knowing the numbers before the news releases? Commenters were shocked. Yeah, right. Like they were really shocked. It blows so much smoke. I tell you, I wouldn't listen to anyone in the news. It's like the movie Wag the Dog. You really should be surprised at these things. Well, that's the beautiful thing about what Barbara's done is she's gonna tell you that there are no surprises. Everybody knows how the game is played. You know, you just got to know the rules of the game and how to play it yourself. You got to know what these guys are doing. So do you recommend not using the same time frames between Ninja and Segredo charts? No, like I say, guys, it's all about what view works for you. So you can use either or. You can use a juxtaposition, like a 3-minute with a 1-minute Segredo, or you can use a 15-minute Segredo with a 3-minute, you know, or you can have, what I like to do sometimes is do this. I have my 1, 3, and 15 on one monitor. Okay, it's going to be hard for me to show you because I can only show you one screen and it's going to be a little squishy. So let's pretend this is all nicely spaced out on one monitor. And then what I do is I use my 1-minute, 3-minute, and 15-minute on another monitor. So you can have the same view like that. And you can see when the Segredo all lines up with the, let's take it back to 10 o'clock here. Okay, so here's our 10 o'clock. Our 3-minute is lining up, and here's our 1-minute move. There's our 3-minute lining up. See if I can do this not so swiftly here. And there's our 50-minute. So now when you see everything's lined up, red, 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 you play matchy-matchy with just a Segredo. At some point, you can be experienced enough to do that. You can say, oh, I'm just going to do 15 minutes, number 1 and number 2, and then I'm going to just go short as long and exit on maybe the number 5, the 5-minute number 8, or the 1-minute number 8. So you can play exits and entries and exits like that. Enter on the 15, exit on the 8 of the 1. So there's different timings you guys can play with, and that's what you guys are going to have to, you know, get some experience with, become familiar with it. How much the cost of Segredo membership? It's only $100 because you are a member for the Shadow Traders. If you weren't a Shadow Trader member, it would be more. It would be $149. So right now it's only $100. So all you need to do is just simply go to leave off the www for signing up. Go to shadowtraders.segredoquant.com and sign up. And you can cancel anytime by clicking the settings tab. Just click the settings and you just delete your information. Actually delete it and hit cancel. And that will cancel it. So you can cancel it anytime by going into settings. Don't call and say cancel my thing. That's not going to work. You have to do it on the website. And but I would highly recommend it because it's a very useful tool. It really gives you a lot of these confidence boosters as that extra confirmation. Things in where Ninja can sometimes confuse you because one thing looks the same as something else. It's very clear with the numbering system as long as it's lined up. Not every number is true. It has to be lined up. What about the auto trade? I don't know anything yet, guys. I can't say about Shadow Trader schedule or what they're launching and releasing and all of that good stuff. I'm sorry, I haven't been told to say anything, and I can't say anything until I'm told. So unfortunately, you'll just have to stay tuned. Check with the website or send us an email. All right. So we have a couple more minutes here. Any other questions here? Would you recommend getting comfortable with using the Ninja before introducing the Segredo? You know, I would definitely spend a weekend on replay with your Ninja, learning the Remember, you go into your, yeah, let me do this. I'm going to pull up the shadow traders for a second. Go into your videos, learn your clear trade, gap trade, learn your rules. Go to the members download section. Make sure you start with that FAQ, but go to your members download section and make sure that when you sign in, when you go in here, go through these extra documents. These will really helpful. There's the correlated markets, clear trade, gap trade criteria. So learn the rules. Here's another great rule list. The 10-second document gives you the rules. So learn that first, but don't try to master the ninja before you then go master the Segredo. Try to do application both equally at the same time. So do the application of the ninja, learn the basic rules, and then go, okay, now I'm going to see how does that work with the Segredo. Pull up a 1-minute Segredo with a 1-minute ninja and see, okay, how are the two correlated, and try to connect the dots. So here you can see, oh, I'm not connected. I wondered why it's not not matching the Segredo. I just realized that I'm not connected. Just connecting to the market real quick. So according to your definition of a trend, you will look at the 120 minute in relation to the 1320, correct? Well, for long-term prediction, yes, but for medium term and shorter term, you could still look at your 3 and your 1 minute 1320 crosses. Doesn't always have to be for 120, and sometimes you may not be sure with a 1 minute. The 120 could be just crossing, or about to do a gap trade after a cross. So you may have to go look at a 60-minute, or you may really have to pay attention to whether the 50-minute is red or green. They're all going to show you the different timings of those price changes. So, but ultimately the Segredo is really going to help you with that. Especially the 15-minute Segredo is a real useful tool in terms of trend direction. When you see the HMA cross that 13 on the Segredo with the numbers confirming, that's a really nice measuring stick for medium-term trend, because remember, most traders are not going to be in the market for 2 hours. They don't have the stamina and the patience and the risk tolerance for that. So most people are just looking for in and out opportunities that are high probability. So when you're looking for the smaller range of trends to give you those in and out opportunities, you're really looking at your 15-minute as your long-term projection. I check in with the 120 in the mornings to see, okay, today's going to be bullish, mostly bullish, or today's going to be bearish based on the 1320, but then I have to go lower in time to see my immediate opportunities. So we look at here at the current Segredo, you can see, oh, the 50 minutes been telling us for a while it's time to gap close. Therefore, we're starting to get green on the lower time frames. So therefore, I've been looking for a 1 or a 2 to time myself, to give myself a clear trade or reversal trade opportunity here on the 1-minute chart. And all of that is already told to you and forecasted for you using the 15-minute yellow bars. Great session. This is all falling into place. Thank you so much. Excellent. Do you need a separate data feed for using Segredo for stocks? No. The Segredo is it's like clicking onto Facebook. It's its own browser, so you don't have to worry about the Segredo data feed. You just sign on to it, just like you go to Facebook. So you make sure you use the Mozilla, the Firefox. Make sure you download that, and then you just pull up your Firefox, go to segredoquants.com, sign in with your password, and it will. You just click on the market. If I pull up the let me pull up the main radar page call this the radar page. And if you just go down here to your stocks, there's also you just click on it. It's all there for you. You can see, look, they're updating real time. Very informative as usual. Excellent. Do you know the auto trader will be included? I don't know anything, guys. I can't say anything. I don't know. What is the red line on the 1 minute grader? I don't know. I think I just have to refresh it here. Just if something's funky with your plotting or something, just refresh it. All that is the HMA got corrupted there. When I was playing with the, scroll back and scroll forward, it just corrupted there. Just refresh, reload it. Is it possible to get in intraday stock data on Ninja? It'll give you a daily view. If you can on the Ninja, if you go to if you connect to your Kinetic end of day, it's free. Now you can't pay for a Kinetic subscription and get your stock data through Kinetic, but if you just want to check out your basic stocks, you just click on, and it's free, Kinetic end of day, and then you can pull up the stock chart. Let me see here if I can do this for you. How do you refresh the charts on those quant? You just right click on the chart. Anytime you want to do something, right click and just hit the reload button. That's all. Just right click and reload, and it will refresh it. And sometimes, they can become static, especially if you walk away from your computer for a while and your computer goes to sleep. When you go to the bathroom, come back. Sometimes you just have to refresh them. Don't get all upset if it's stuck for the moment. Just right click on the chart and refresh it. Yeah. Go to Tools, Instrument Manager, and you can pick a market. I was looking for Bank of America. Yeah, BAC. Just put it in your default list by clicking the arrows. Never ever hit the delete button, guys, because then you have to call the broker to put it back into your system. Deletes it permanently. You want to remove something from here, you simply use the arrow that points away. If you want to add something, you use the top arrow. Okay? Very, very important that you never ever hit that delete button in the instrument manager. And so now I can change my chart. Let me just get rid of Segredo for a second. I think BAC is in here somewhere. I can change oops. Interesting. I think I have to use the daily chart. There we go. Sorry. The Kinetic, well, I think will give you the lower thing, but for the end of day Kinetic, you have to use the daily charts. But there's your Bank of America. How do you add the Forex to Ninja? You can. I haven't gotten it to work yet. I'm still fussing it around. You can simply just add it. Just go to Tools and Instrument Manager. But it doesn't. It's not a moving chart. It's a static chart. For some reason. See, like here, you just go to Instrument Manager. It's in here. It's all alphabetized. So just find, like, there's your euros, Euro USD. And you click on it. And but you really need the Kinetic data feed for that, for the Forex. And what I have found, let me disconnect here. And I think with Kinetic there's a monthly fee. I'll show you here. Yeah, it's $50 a month, which is worth it if you're paying for the things. But I'm gonna see here if it's moving. I haven't. There's an issue with Ninja. I know you really need 715 version 715, which I have. Make sure you download Ninja 715 if you're gonna try to use the forex markets. But look, here's the Aussie dollar, and I'll change it to a 1-minute chart because I have the kinetic loading here. And you'll see the problem we have is that we've got a nice static chart. Oh, seems to be, maybe it's fixed. Oh, it's fixed now. There was an issue where the timer wasn't working and the candle wasn't moving. No, it's fixed. So yeah, that's what I would do. I would subscribe to the kinetic data feed, and I would there you go. Just add it to your default list. Are you using 715 for trading the 60 with Ninja? Yeah. Just download Ninja 715 and use your Shadow Trader 714 because we only have 714. Is there an advantage to trading on the Forex? Well, for Americans, you're going to pay slightly higher margins, so the futures are lower margins than the Forex side. But the nice thing about the Forex is if you, especially, you're not going to have filling issues that you could have in the, when you enter, you're going to get filled. Whereas sometimes you can get left in the dust on the futures, especially on the fast moves. But you know, for if you're not American, like I'm not American, people think I'm American, but I'm not. There's an advantage for me trading the forex because I get a lower rate in margin. I only pay like $35 a contract, whereas you pay 75. So it's for Americans, it's cheaper. Do I need to request a Forex account with FXCM in order to get the Forex data feed? No. You can get Kinetic. You can get that through Ninja through your current broker. You can actually get Kinetic through your current broker in the U.S. And then just play with the Forex. It's available in Ninja for you. So you don't need to. But if you want to open up an FXCM account, you're going to pay slightly higher rates. You can get the demo feed from FXCM. Yes, you can. Ninja just sent me on how to add FXCM to my account to the Forex, my account for Forex. Oh, okay, good. If an active trader, you can use single broker license with and FXCM will give you the necessary info. Add to your existing license key. Okay. You will need a multi-broker license from Ninja. If you download 715, do you have to also download 714 from Shadow Trader? Well, yes, you always have to have 714 regardless. You should be on 714 with Shadow Traders because that's the latest greatest. You don't want to be on anything older with Shadow Traders. Remember, you always want to go to the members download, see, and check the dates.